What's up guys, 1% Trading here. Today we are going to look at FIBs. You probably heard of Fibonacci retracements if you've been in the Forex industry for some time. So I'm going to quickly break down how to use it and how not to use it, but with a very big twist. That is because most people use FIBs in a certain way that I think is completely wrong and should not be used in a certain way. So let's first take a look for those that are new to the markets what Fibonacci retracement even is. So as you probably know, market can be moving in uptrend, downtrend or sideways. So let's take a look. For example, this would be a downtrend, right? It has lower lows, lower high, lower low, lower high, and another lower low. So what we then do is, let's say that we are expecting a new lower low, right? So we have a new lower high, and then what we do is take our fib retracement, and from point A, point B, and let me just, this is something that you would probably be used to seeing a little bit more. Let me just take what's unnecessary here. Now I just leave it because you'll be more familiar with this. So, and then what most people will teach you, that you are looking for additional confirmation at these fib levels. So let's say if the price bounced from here lower, you would say, okay, this was 0.5 fib retracement. Now let me explain you on real market examples why this is completely wrong and why majority of traders and teachers and mentors are losing because of using fibs the wrong way, and would probably do much better if they wouldn't use it at all. So this was GBP JPY on March 2018. It's just a random point in time. You could probably find very similar examples all over the market. So we have an uptrend, or if we just zoom on this area, not looking at the bigger picture, and we can see lower highs, lower lows, so uptrend. And at this point we can't really buy here because we've been moving quite a lot here, so we have to wait for a pullback and then potentially enter in a buy to catch new leg to the upside. So you're just waiting, and at this point let's say that from here to here you already know, okay, you're waiting for that pullback to happen. And I'm just gonna move this, so you could leave this right here, but just so it's a little bit easier to see. And you're waiting, okay, and for example right now what most people would say, fibs are there to give you a confirmation, or that's the most common word used, and in this case probably most people would say exactly that. You put your fibs from point A to B, we came to 0.5, or maybe you could say even 0.618, area, and there's some rejection from here, right? You have a wick, and yeah, let's say this was very similar here, so A to B, and then here a pullback, and also the wick here. Same thing happens here, right? It was some kind of rejection of this level, which is now acting as support. So people would say, okay, came to 0.5 retracement, now we go long from here, right? Seems like a reasonable analysis. Okay, let's go forward. Okay, nothing happened yet. Bam, huge bearish candle. Maybe it will reverse, we never know. And bam, our stop would probably be hit right now. If we jump a little bit further, some rejection again, and this could also be an entry. And let's just rewind this quickly. So it's just want the price to go a little bit higher, so we can actually say that we formed a significant higher high. Of course, the market can take as long as it wants to, right? So, for example, right here, let's say, yeah, the target was basically hit. If you're aiming for 0.27 retracement. So, what can we do right now with our FIBs? So, the point that I'm trying to make is that you can't really help yourself with FIBs a lot, really, because the price came right here, showed some rejection, and if you would be relying on FIBs, you would say, okay, this is 0.5, this is a confluence, everyone teaches that, so let's go into buys. What happens? The price drops lower. Now, of course, you can see that this happening all over the place, basically. If you look here, if you look, basically everywhere you look, you'll find examples like this. But the truth is, FIBs are basically useless. Why? Because it doesn't tell you anything. How is it confluence if you have 0.382, 0.5, 0.618, 0.786, and don't forget, we could also have a 100% retrace. So all of this area, and of course these are only the most common fib levels, but you could also have some other fib levels. So all of this area basically is what people would call confluence. Well, but does that really help you with anything? No, it doesn't, because if the price comes to, so we have this A, B, so we're looking for our point C before moving to the upside. So if the price came, let's say, only to here, you would say, okay, this is confluence 0.382. Well, you would be wrong. 0.5, again, wrong. 0.618, again. Does this really tell you anything? No, because this whole area is quote-unquote confluence that people are constantly talking about, but it doesn't tell you anything. It's basically completely useless because it doesn't help you with anything. It's not a confluence. How can it be a confluence if you have all this area, all this room that price could potentially go, and no matter from where it would reverse and go to the upside, you would say, oh, confluence. It's not confluence. If you would have, let's say, if you would have only this small area and all the fibs would be here. Now that's a big hint, and that could be confluence, yes, but if you have such a big area, then it won't help you really, because if you enter here and you say, oh, okay, so let me take a long trade from here and target for 0.27, and you have to then put your stops a little bit below the previous low. You only get 1.244 risk reward, which is absolutely garbage. You don't want to be trading anything that is less than 1 to 3, or my rule is never go below 1 to 4, even though I rarely go below 1 to 5. And with this kind of risk reward, you really would need to be winning a lot of trades, and your results would be really poor, and you would really need a lot of time to get anywhere. And yeah, so this is just not the way to go. If I just demonstrate this once more, so why are fibs useless? Well, because let's just do this example again with only with lines. So we have let's first draw our, let's say that we are in uptrend, and we have our A and our B point, and now if the price comes here and goes up, maybe here and then goes up, maybe here and up, here, and let's not forget even like from the middle of this section, because why not, right? You have million possibilities, and no matter from where, all this big range. Now we're in uptrend, so obviously we're only looking for buys, and the only question from when we figured out that this is an uptrend, then the only question is really, is the price going to reverse from this area, maybe this area, maybe this area, and then go to the upside from here? But if you're using fibs to try to understand where this small area would be, you're left with one huge area that is basically completely useless, because it didn't tell you anything, and you're just left with basically the same you started with. I'll go a little bit deeper into this topic and how we use fibs, because we still actually use them, surprisingly, but in a completely different way, and with a lot. It actually gives us an edge, and it is and it can be useful, but just not in a way that most people use it and most people would expect. So you just need to completely change how you look at fibs, and then it can be helpful. I hope that makes sense, and see you in the next video.